Okay, markets have managed to bounce back. Nothing exceptionally strong, but it's good to see some green on the screen when Asian markets are trading with a downward bias. What's helping the market? Some banks, key pharma names, and excuse me, and FMCG names selectively. So let me now bring on board Gautam Trivedi, Managing Director and Head of Equities India with Religare Capital Markets. Gautam, good morning. Good to have you back. Characterize the market environment for us. September was a great month, but October things have gone nowhere.
Yeah, I think there are a bunch of issues, I think, which are clearly hurting the market at this point. First of all is the fiscal cliff, which I think is a major issue back in the US, which at least from our side, and I think most people I talk to, most of the brokers I talk to on the street, flows from the US have gotten a little soft. That's one. I think second is the continuity on the reforms. You've seen a lot of talk about reducing the fiscal deficit, which I think is very positive. But the fact is, people want to see more evidence of actual ability of these are two issues. The third, of course, I think a lot of people were waiting for yesterday's event, which was what the RBI would do with respect to interest rates. And I think that was really probably one of the reasons why a lot of people had held back on investing, at least in the last 10 days or so. So hopefully we see a better November, and the October did not match the flows for the previous month, but I think November should be a better month.
So Gautam, what is your sense? Because we were in any case consolidating and just about dragging our feet around 5,700, and then came in the disappointment from the RBI, and we've taken a step back, and a huge one of about almost 100 points. How soon before we at least get back to the 5,700 levels, and then perhaps later make an attempt to scale up higher?
I think let's look at the earnings season. Of the companies, 200 odd companies that have declared numbers so far, I think the numbers have taken most people on the street by surprise. We've seen an average of roughly about 25 to 27% increase in net profit, which has, I think, been phenomenal. I think you have the VIX, which is now at about 15, which is a near lifetime low. So I think if you look at some of the positives which are going, plus reform-oriented government, and well, if you look at from the September 14th till now, you've seen roughly about $5.2 billion of net FI inflows, which is almost $1 billion a week on an average. So I think the momentum is still very positive, and like I said, I think November will see a positive uptick in flows.
Gautam, a call which has worked for you is cement. Now, cement stocks this year, they've been marked outperformers. Yeah. But is it now time to log out of cement stocks? Look at valuations. Ambuja, Ultratech, ACC, they're trading at EV per ton of something like $220 per ton.
Yeah, fair point. I think Ambuja and Ultratech, ACC clearly are expensive. But the problem is, I think, I mean a good problem, I don't mean a bad problem, but the thing is that the overall demand in cement that we forecast over the next 2 years is an incremental 44 million tons, but supply is only 33 million tons. So when you look at that mismatch, number one. Number two, what you also have is over the next 18 months, 11 state elections plus the general election. So you add all of these together, and effectively you've got a situation where demand remains extremely robust for cement. Capacity is not necessarily coming up. And I think there's no other way out but to keep buying cement stocks. If you look at the second quarter results that have been announced so far, profits are up a minimum 100% year on year. So I think the good times in cement will continue. We're still pounding the table on buying cement stocks, and maybe now is a good time to look at some of the mid-cap names, which have also done very well but are still reasonably priced. JK Lakshmi Cement is our top pick. It's trading at 5.1 times FY14 EV EBITDA. As is Shree Cement, which is at 6 times. And both these stocks in particular stand out because they use pet coke, do not use coal, where supply is not so much of an issue and the pricing is slightly at a slight discount to coal.
Gautam, what is it that you're telling your clients in terms of approaching the rate-sensitive basket, in particular banks? Would you use the dips right now to add more, or would you stay away from the banking pack?
I would not stay away from the banking pack. I think if you don't buy banks in India, the India story doesn't really get captured in a portfolio. But I think the way to look at this would be selective. I think I just had breakfast this morning with a large foreign institutional investor, and he couldn't stop talking about HDFC Bank and what a great bank it is. And the fact that he said over the last 5 years, if he had not spent time researching other banks and purely put all of his money in HDFC Bank, he would have made a significant amount of money because the stock has appreciated 30% over the past 5 years compounded. Having said that, I think this correction clearly is a good time to look at some of the stocks that have corrected. We still like Yes Bank, we like IndusInd among the privates. Of course, HDFC Bank we continue to like, as we like HDFC. And among the PSUs, we like Oriental Bank of Commerce. It's at 0.65 times price to book, extremely cheap, and results actually were very encouraging. The other one we like, but we'd rather wait till we hear the results, is State Bank of India.
So what is the basic benchmarking tool you are using when it comes to PSU banks? Are you hot on banks which are trading below the book, or are you hot on banks which have a large exposure to infra? And if the economy revives, these banks will also revive, because bad loans will become good loans.
I think good question. The benchmark really is more stock specific. I don't think it's so much related to PSUs in general. I mean, there is a bias across the street to remain in privates versus PSUs, because a lot of people end up painting the PSUs with the same brush, which I think is a bit unfair. But I think it's really bottom up, and that's the way we're approaching looking at which stocks to buy within the banking space, especially the PSUs.
Do you think Hero MotoCorp, given the way how the dynamics of the two-wheeler market are changing, it will go through a process of permanent derating? They're losing market share. They have very little exposure to exports, and Honda is making Honda is really giving them stiff challenge.
No, clearly. I think it's unfortunate what's happened to Hero MotoCorp in some ways, because it used to be the darling of the stock market, and suddenly you end up seeing 6 weeks of inventory and the company struggling vis-a-vis Honda and obviously Bajaj as well. Our top pick within the space is Bajaj. It's not so much Hero, but I think given where the stock is now, another 10% correction, the stock definitely starts to look attractive. So I think we continue to remain more positive on Bajaj versus Hero, but at some point Hero becomes attractive as well from a valuation perspective.
Gautam, what about names from the consumption space, the likes of a Titan? We saw what Colgate did, but Titan as well as Tata Global are slated to come out with their earnings today. Do you think all the good news is in the price and the stocks are expensive, or is there still money to be made?
Well, our view, when we changed our view on the FMCG space, in the consumer space in general, around 6 to 8 weeks ago, wherein we've been recommending investors to book profits in the consumer staples and look at the consumer discretionaries. So they continue to stay invested within the consumer India local demand space, domestic demand space. And within that basket, we like Bata, we like Titan. Yes, I don't think Titan's necessarily cheap. And I guess yesterday's impact by the RBI of whether banks will be curtailing their loans to for gold purchases to jewelers may have some impact. We haven't really factored that in as yet to figure out what the impact is. The stock is clearly not reacting to that at this point. But I think Titan remains a great long-term domestic demand story, and from a longer-term perspective, people who have that view or that time horizon, Titan and Bata would definitely be the two stocks to focus on.
Gautam, do you think we must recognize that the polarized nature of this market is changing? If I look at the top 3 gainers on the Nifty for the year 2012, it's not HUL, it is not ITC, it is Ultratech, L&T, and then IDFC.
Yep. But I think there has been a fundamental shift from moving away from defensives into slightly higher beta names. So I think you've seen some of that. I think you're right. L&T probably stands out among the infra space. The rest of the infra space really is untouchable at this point, even now, unless you'll see some of those companies make any significant headway and progress in restructuring their debt and or selling assets. So I think, in fact, what I've told my infra analysts is that let's try and find the next walkout from the infra space, and I'm sure there will be one. But I think back to your point, the way to look at this is really start to position yourself towards more higher beta names, and I think the time for the defensives is now behind us, and it's time to get definitely more aggressive in picking stocks.
Which are the 3 stocks which could be the next walkout in making? You've taken the bar up by using walkout as a benchmark.
Sure. We're still identifying some of them, but I think one stock that we've started doing work on, which we think is very interesting, is TV18 and Network 18. Both these had huge debt on their balance sheets. Post the rights issue, the debt's come off significantly, down almost 80%. And operationally, I think with the tie-up with Reliance on the 4G side, I think both these names will actually do very well. So we like that name. The other stock to look at actually, and we haven't really done more work on it, but it's just starting to get into the limelight, is Suzlon, 14,000 crores of debt. It's just entered the CDR process. It'll be very interesting to see where the stock goes. And frankly, at 15, 16 rupees, stock is really at a lifetime low, and I don't see a significant downside. The others, within that metric would be maybe a Lanco or a GVK or a GMR. Again, we haven't seen evidence of them being able to conclude a deal, or even Jayaprakash for that matter, which made a significant effort to try and sell the cement business, which compared to what he said about Ultratech at 200, 220 dollars a ton, this was much cheaper, but the deal fell through. So I think these are some of the names that I would be tracking to see how successful they'll be eventually with respect to shedding assets and reducing debt.
You are telling our viewers to buy risk. You're telling our viewers to buy some stocks which have some hope associated with them. That could be risky. That could be dangerous also.
Yeah, like I said, I think we're doing work on it right now. We're not there yet in terms of forming a view whether it's a buy or not. But I think a lot depends on how these stocks end up deleveraging over the next 6 to 12 months. That's really what I mean. These are the names. These are names we would be tracking and looking out for versus saying they're buys today.
So Gautam, give us some names, going by what the earnings season has showcased.
Yeah.
Sectors and stocks that you would completely avoid at this juncture.
I think real estate is still pretty much an avoid. I don't think I'm saying something that's unique necessarily, but we still like Prestige. We like Soba. We've in fact upgraded up our numbers for Prestige, our target price for Prestige today to 200 rupees. So I think, but overall, outside of these two companies and maybe an Oberoi, we're still pretty much avoid on the real estate space. Infra, like I said, is still an avoid. It's more to do with financial restructuring that would, I think, be impactful. And I think when I think of other sectors that may not necessarily still be attractive, would be utilities. I think that's the other one that stands out, where I think people still don't have the confidence post results to accumulate them.
Gautam, before we wrap, let me use the poker terminology. Give me one large cap stock where you would like to say it's time to go all in.
Ultratech Cement.
Even at these levels, after a 70% run up?
Yes.
What about valuations? $220 per ton. That's a brave call.
Yes, it's a brave call.
But it's a confident call?
It's a confident call, but I want to add one more stock in that if you have time, is Hathway. I think that's another stock which clearly stands out with respect to the entire digitization space. That's the one sector where reform from the government over the past 3.5-4 years has actually happened, and the government seems very committed to see it through. So I would definitely focus on that stock. We have the highest target price on the street at 320 rupees.
All right, Gautam, thank you for your patience. You've been quite charitable with some stock specific ideas. I was hoping for 3 or 4. You obliged us with nearly a dozen stock ideas.
Thank you.
Now, before we wrap the show, let's go to Sandeep Agle for some more trading ideas. Sandeep.
Nikunja, buy in Maruti, very clear breakout. Stop loss of 1405, target of 1468. A buy in Glenmark, stop loss of 405, target of 460. This is over the next few weeks, not a few days.
Okay, Sandeep, good to have you on the show. On that note, we will take your leave on this edition of First Trade.